Are you interested in getting homeowners insurance? We are transitioning from what they call a hard market into a soft market, and it's the beginning stages of that. And I think you need to understand that if you're going to live in the coast anywhere in the United States. And Mark Riccardi is going to explain exactly what that means. So stay tuned. I'm here with Mark Riccardi, Belmont Insurance Group. I thought this would be a really good time to talk about the insurance market in the Lowcountry of South Carolina. So, what's new in the market?
Yeah, thanks, John. It's great to be here. So, things are starting to change a little bit. I think we've talked on prior videos about how the insurance market, like other industries, is cyclical. And as many of you know, we've been in a challenging market really since 2020.
Really all along the coast, right?
All along the coast, and even inland in areas where we traditionally haven't seen as big of an impact from hard market cycles. And so I guess probably where we should start is what defines a hard market, what defines a soft market.
Yeah.
So typically in hard market conditions, we'll see reduced underwriting guidelines, less appetite from the carriers. They're really underwriting for the bottom line. They're really selective in the types of risk that they take, not only from a client perspective, but the type of property that they're writing.
Right.
And things just get more expensive, right, overall. Soft market cycles, we generally see a broader appetite, more willingness from the carrier to write risk that maybe wouldn't fit in a hard market cycle.
Okay.
And as a result of that, usually it comes along with decreased premium pricing in the market. So 2020 marked the start of the hard market, and not here to declare the hard market.
Really? It started in 2020?
2020, so it's been quite
5 years.
It has been.
Really?
It has been. So.
Meaning when you want to write an insurance policy, because Mark's a broker and you shop your sources, correct, right? And it's hard to find insurance.
It can be difficult. Sure.
Expensive, or finding the right price and all that.
Exactly.
5 years.
5 years.
So what's changing?
Well, what we're seeing is the interest rate market is continuing to improve and stay up a little bit, right? And so that generally helps insurance company from an investing standpoint. They've now are beginning to be profitable again. If we look at 2024, any year-end results, insurance companies were, for the most part, very profitable. And as a result, that attracts capital back into the industry, and then that capital's got to be filled. And so we're starting on the very front edge of seeing underwriting guidelines loosen up a little bit, maybe having a little bit of negotiating power, not a lot, but a little bit of negotiating power in the marketplace, which ultimately will help with clients that are looking for coverage.
Okay. And now I should also say coast, from really Massachusetts all down the coast around the whole eastern part of the country, really. Right. It's not the Lowcountry of South Carolina.
That's right.
It's the whole area.
It's the whole area.
Okay.
Yep.
So you're starting to see prices come down.
A little bit, right?
Okay.
But one of the other key indicators that we look for in the marketplace is new formation of insurance companies, right? And so if we look at Florida, since 2024, I think roughly 8 to 10 new insurance companies have opened up. They're not all actively writing, but they will start to write when pricing from the reinsurance market gets attractive enough. And as a result of that, we'll probably see those carriers in South Carolina, which creates the competition aspect of the marketplace that we've been missing since 2020.
Wow.
And so we can involve more carriers into that process, and ultimately that'll help drive pricing down as well.
So it's tougher in Florida if you're living there to find insurance, would you say?
Yeah, Florida's definitely a challenge, right? But again, a key market.
Florida. No.
But again, a key indicator in Florida is that market's again starting to soften up a little bit, and I think over time that'll move into South Carolina. So I want to be really clear though, like we're not out of the woods yet.
Yeah.
But certainly the market conditions are starting to improve, and I think 2026 will be a year that we'll really see that happen.
Okay, but a lot of this is based on storms. Every single year there are storms all around the country, right? And so if we have, let's just say, a bad year in storms, it doesn't. I'm not talking about here, just anywhere on the coastline. Would that change things?
So insurance industry, they can price in storms.
Yeah.
Right? We're in the southeast part of the United States. there's a chance at some point we'll get hit by a storm. So we can price the carriers can price those types of factors in. What really is more important is the available capacity, right? So when we had multiple large events, California wildfires, Texas freezes, those types of events, are really massive events, and then you take the hurricane in 2022 in Florida, that creates losses. Investors don't like losses, and so the money pulls out and goes into more traditional investments. Now it's making its way back into the industry. So we're simply cycling through that hard market, which is key.
Well, that's good news.
Good news is soft markets historically run longer than hard markets, right? So hard markets on average.
I just didn't know it was 5 years.
This last one.
Wow, interesting. So somebody moves down here and they want to insure their home. What is the big advantage of calling Belmont Insurance Group versus a big box company?
Yeah, so I mean,
State Farm. I mean, I could name quite a few.
Yeah. So we like to look at ourselves. We're still a boutique insurance firm, right? We place a lot on client service. We place a lot of emphasis on the carriers that we represent from a financial stability perspective, in the policy forms that they're writing. And then the other thing is we like to provide front-end risk management ideas for clients to help them reduce the cost of insurance, right? So things like automatic water shut-off devices.
That affects the insurance.
Absolutely, it helps prevent losses, right?
Yeah, sure. Yeah.
So the number one loss in our business, you think it's hurricanes and wildfires, but it's still water from leaky pipes. So if we can take that exposure off for our clients in the form of a device that'll help indicate if there's leaking water and then shut the water off to the house, makes sense for our clients to do that. And we may be able to attract more carriers into that process, right? So you probably hear me say over and over again, it's about attracting more competition into that buying process so that we can maximize and leverage.
So do you find that a lot of people call you and shop around, or are they pretty much committed to calling you and getting insurance, or is it a process that the customer's going through?
Yeah, I mean, the best process is pick your agent and then let your agent go to market and do the work, right? If you start involving 3, 4, 5 different agencies, it can get really messy.
That's good to know.
So pick your agent, let your agent do the work, and so interview your agent before you make a decision and have them go to market. And you'll develop a comfort level with that agent, and hopefully ultimately trust them to do the work, and then let them do the work.
Any other big questions that you tend to get when you're talking to a new client as far as the insurance goes?
Yeah, and I think one thing we run into here a lot that clients are unfamiliar with is a separate percentage deductible that applies to those named storms or hurricanes or wind, hail, depending on what it is in the policy form. So having somebody help you navigate that, because that can be a big expense, right? You got $1 million home, 2%.
Is it 2%?
2, 3, 5, 10, right?
Depending
on what you buy, right? It's a percentage of the coverage amount. So if you've got a 5% wind hail deductible, that's a $50,000 deductible before the insurance company will start to pay. So, so just being mindful of those, contracts, right, is really what our industry is based on, and having somebody be able to help you navigate those is important.
But they don't really know. Do you find that your clients know a lot about this, or you just have to really educate them with the process and deductibles?
What we find is on the front end, clients sometimes are confused by that. Hopefully, if we've done our job correctly, by the time we're done, they're much more educated buyer.
Okay,
for sure.
All right. Well, that makes sense. Well, I think a lot of people watch this channel, and this particular video is sponsored by Belmont Insurance Group, and we send all of our clients to Mark to get homeowners insurance, flood insurance, things like that. So we have a whole team of small businesses that we work with, and Mark has got the insurance market covered. So I'm going to put Mark's information down below. Feel free to call Mark, choose your agent, and let him go to work for you. Is that right?
That's right.
Okay. Anyway, I appreciate it. Thank you very much. And call Mark, and he can answer all your questions about insurance.